Everyone, Paul here. Today I'm going to be talking about a new strategy. Now, if you guys saw yesterday's video, this is similar to that where I covered crypto using this strategy. But today I'm going to use it for trading strategies using gold, trading gold, and Forex. So now, gold moves in such a way to where it's very volatile, so you really have to understand gold and the patterns. It moves kind of in the similar patterns of Bitcoin. So if you can understand, trading gold, you can make a lot. And with this strategy, it really helps a lot find all those moments. But what you're going to be doing is you need 3 moving averages. Now, there's a specific indicator that you need. You need to go to the CMEMA trend bars, and there's 3 specific indicators that you need. And with this particular strategy, it really helps show you, moments to get in and moments to get out. So I'm going to walk through gold and a couple Forex pairs, and we'll see how well this will work. Okay, first let's start off with gold. And what you want to do is you want to go to your indicators, and you want to go to let's just go here because nobody will have it on the favorites yet, but let's just go to CMEMA trend bars. It's by Chris Moody. So that's what you're going to get, and you're going to load it 3 times. You're going to do your 9. So you're going to go and you're going to load the CMEMA trend bars, and you're going to change your settings to your input's going to be 9, 90, and 95. Those are settings. Now what I do is I make the 9 more thick, because it's really the 9 you have to be looking at. So what you want to look for in this strategy is, let's see if we can find it here. We're looking at gold. So it helps here to shut off the candles for a little bit. So what you want to look for is a moment where it crosses. So this is the number 1 rule of this strategy, is it has to cross. It either has to cross up or it either has to cross down. So we can find those moments right here, right here, right here. And let's just look at a couple more. There's one right here and right here. So you look for moments where it crosses. So after it crosses, you're going to use the 9 as an indicator of what direction to go. So since this is color coded, it will basically tell you when to get in, when to get out. Now there's a couple times where, I do this on the longer time frame because I think it works better, but you have to wait for it to cross, and then you have to look at your 9 CMEMA trend bar here. So what you want to look for, if it crosses down, the only direction that you need to focus on is when it changes to a red. If it's going up, you need to look for it going green, all the moments where it's going green. If it's going down, you need to look for all the moments where it's red. So it's color coded, and it helps. So if you can see right here that the gold, and let me show you real quick on my demo here. I made some profit overnight. Not profit, but it was demo. But basically this gold trade right here, I made $2,000 overnight on a demo account using this same strategy. So let's go back to the charts. And basically after the 9 crosses, what you want to do is you want to focus, because if it has completely crossed in that direction, you focus on the 9 changing to that color. So if it's going down, you focus on when it turns red. So basically, you see it go red, and since the direction is down, you follow it from when it changes red, and you could follow it all the way down here to when it starts turning green. So that would be your moment to get out. So you could ride this entire moment right here. Let's see if this is profit at all. Let's check this out where it's at. It's right around here. So you ride this entire thing out throughout here to here, and you would have made that's a 10,000 pip move there, I think. But anyway, let's look at a couple other examples on gold. We'll do a couple, and then we'll go to the other Forex here. So we see that it crosses right here. So what we want to look for is when we don't go for any moment that's green. We go for any moment that's red. So you see that it goes red all the way down here. So you know exactly when to enter and when to exit. So let's just check this one out to see if it's profitable. Now, when you're doing this, make sure you have enough with your lot size and do your budget, accordingly. Do proper risk management. Okay, so this one is 13 hours and a 20,000 pip move. So if you had $1, you would have made 20,000. So that would have been great. So let's see. Let's go here to. So this is. Let's wait for the next cross. This goes up. It's crossing up right here. So what you do here is you focus on all the moments where it's green. You focus on all the moments where it's green. So you could get in here to here. You can get in from here to here. You can do this small one from here to here. You can do here to here. So let's just check a couple of these, and then we'll move on to some other Forex pairs. So from here to here, it's about 17,000. So that's a 17,000 pip move. If you had $1, you would have made $17,000. There's one that is around here to here. This is another 18,000 pip move. You would have made 18,000 if you did $1. So anyway, that's gold. That's how you can do it really well with gold. Let's go look at a couple other Forex pairs. Let's look at Japan yen. Okay, so the Japan yen, let's just hide the candles here. It's the same thing. So it crosses right here. Crosses right here. So you want to look for all the moments when it turns green. So you could have had a little scalp right here. You could have rode this entire thing up here and be in profit. Let's just see what happens. If you rode this entire part right here all the way up to here, this is a 1,000 pip move. If you had one lot size, $1 lot size, that would have been $1,000. That little move right down here, here to here, 175 pips. So that's a small one. So what I like doing, let's hide the candles, and we can see you have to go in when it crosses, and when it crosses, you'll know the direction. Now, this works the best, at least in my opinion, doing it on a longer time frame. It may not be available on a longer time frame. That's why you use the 9, because when it changes from like a red to a green, you know when to get in and when to get out. So because it crosses, you know that it's going in that direction. So this might have been too late to get in this one, so you might have caught this one right here, which is a small one. But yeah, that one you might not have caught. So this one is going down, it crosses down. You might have missed this one, so the next ones would be either a small one right here or this one right here would have been a good play. Let's see if you would have made a little bit here to here, 500 pip move there. So some of these will be big moves, some of these will be small moves. The point is this kind of outlines the direction and when to get in and when to get out. So could have crossed right here. You might have caught this one, but if you didn't, your next would be the small one right there, which would have been a small one. So you want to go for when it crosses. This is another moment where it crosses. You might have been able to catch that. If not, the next one would have been this one right here. Crosses right here. You might have been able to catch that. Let's see if there's any more. Okay, here's a good one. Crosses up. You might have missed this one. It turns red. Wait for it to turn green again, and then you could have rode. You could have rode this entire. You could have rode. Where'd it go? Where did it start? Where did it go down? Hold on. Okay, so it was. You can't really tell, but it was right about here where it changed, and you could have rode this whole thing out. Been in profit. So anyway, let's look at one more pair. Let's look at the British pound and see how well this works for that. We're going to go, let's go down here. Let's go to hide. Now, what we could tell right now, and we could tell that it looks like it's about to cross. So let's see, let me do a demo here. Let's just do a demo and practice. Let's just do a British pound. We'd sell. I'm already up. I'm already up. Let's see. Profit. Give me 100. Give me 100. Oh, I'll check on that a bit. Anyway, let's just look at it. We'll look at it right before I end this video. But anyway, you see this is about to cross, and they're both red, so it could lead into some gains here. So let's look at a couple more. Okay, so we see that it crosses up right here. So there's a bunch of snow. When it crosses in that direction, you always know to take the direction of what it's crossing. So you never go against the trend. You'll probably end up getting wrecked. So since it's crossing up, you focus on the moments where it changes from red to green. So you could get in a small one like right here to here. Wouldn't be much on this one, but it's a small one. So we see that it crosses. Let's turn off the candles here. We see that it crosses here. You might have missed this one. So you see it turn green a little bit, then it comes back and it's red again right here. So we would take that trade from like here to where it turns green again. You can get in from there. That's 744 pips. So let's do this one. Well, this one it's green from the start. So if you miss this, you would have to try for the next one. If you miss this, you would have to try for the next one. So this looks a lot of sideways stuff to me. So see what we got here. We got crosses down right here, and then it turns green a little bit, and then right here would have been a good moment to get in because it turns red again. So we go here, we take this trade from like here all the way down from when it turns green again, which is right about this is 1,239 pips. So you guys get the general idea. This is how to use the strategy. It's very simple to use it for Forex. I think it works really well for gold here. If you look at gold, it works really well on finding the movements of gold. Gold is something to where if you understand the movements of gold, you can make a lot of money with it. So this strategy works well. But let's check on my demo here real quick. I'm down. I'm still down, but anyway, I'm going to leave that going and see what I'll leave a post in my community tab if I make any profits. But anyway, this formula works really well in my opinion. So the purpose of the strategy, and You can use this with other indicators. You can use it with just regular moving averages, but the moving averages are not color-coded. Because it's color-coded, it really helps a lot, and it really helps find the moments to get in and out of trades, especially if you're trading longer time frames like the hour, 6 hour, and there's a little where it tries to go in the other direction. It really helps you find the moments to get in for those longer 1 hour, 6 hour charts. This does not, in my opinion, we didn't look at smaller time frames because it doesn't really work well with smaller time frames. In my opinion, it works better for longer time frames because the whole purpose here is to see it cross and to find a change of direction. In between that and in a 5-minute candle, it's not going to change much. So anyway, you have to do longer time frames with this strategy. I think it works the best. But anyway, if you guys like this video, make sure to hit the like button, hit the subscribe button. I'll see you guys in future videos.